A network valued over $1 billion produces less than $30 a day in revenue. That's not a typo. And here's what nobody connects. Polkadot ranks third on Earth for core developers, ahead of Cardano, ahead of Avalanche, ahead of XRP. Third in building, 26th in earning. That gap is the whole story of this token, and I'll show you exactly where it either closes or kills the thesis. One price on the weekly chart decides which. My last Polkadot update here was June 14th. Price was higher then. Today we're pinned around 80 cents, pressed into resistance, and sentiment has gone quiet in a way that's worse than panic. Panic means people still care. Silence means they've moved on. I've published more than 25 videos on Polkadot. I've held a bag since 2021. So when I tell you this chart is bearish, understand I've got no incentive to say it. What I have is 3 weeks of fresh data, and some of it surprised me. Let's start with what's working, because something is. Polkadot has 105 core developers committing code, third among all Layer 1s, behind only Ethereum and Kusama, its own canary network. Real depth, though down from 140 in June. In July, the team shipped the product's DevNet, a working copy of the coming production network where builders test without real money at risk, and 200 apps are already indexed. The catch is that a DevNet means nothing costs anything. No fees, no revenue. Polkadot generated $89,000 of revenue last year. Not million, thousand. 26th among Layer 1s, below Algorand, below IoTex. Ethereum does 84 million in the same window. Polkadot's whole year is 9 hours of Ethereum. And that figure flatters it, because weekly revenue peaked above 10,000 in September last year and has run near zero since May. Transactions went the other way. 60 million over the year, up 2.5 times, still only 39th by volume. Activity tripled while income collapsed. Fee per transaction has gone to zero. Somebody is paying for that throughput, and it isn't users. Users are leaving. Monthly active addresses peaked near 120,000 in January and printed 39,000 by August, 36th in the industry. 2 of every 3 gone in a quarter, across the entire ecosystem. Grayscale withdrew its spot ETF filings for Polkadot, Cardano, and Hedera. Headlines called it regulatory. I don't buy it. The existing DOT product holds $7.3 million, with zero inflows in July, zero in August, and monthly volume down from 1.6 million in April to 169,000. Grayscale didn't retreat from regulation. It retreated from demand. The Treasury noticed. A referendum just approved pays the moderation team in USDC, 83,000, not DOT, because the previous DOT bounty burned 5 months of runway when price fell. Polkadot's DAO stopped paying its own people in its own token. 24 addresses carried that vote against 120 voting no. Meanwhile, a proposal to burn all DOT revenue from future Jam State sales sits at 99% approval, but support is 0.05% against a 24% threshold. Supply is 1.7 billion, up 70% since 2021, while price fell more than 98%. And staking isn't the shelter people assume. For every 1 DOT reaching stakers, roughly another 1.21 goes to validators and the Treasury, much of it straight to the open market. You're paid in a currency printed against you. Unbonding also fell from 28 days to 48 hours, removing the friction that slowed capitulation. On yield, and this channel is called Crypto Yield Pro, so I'll be plain. 3 DOT pools clear $1 million. Bifrost Liquid Staking pays 4.5%. Hydration's Stable Swap, 0.5%. Hydration's Omnipool advertises 7.1%, but only 1.8% is base yield, the rest emissions that vanish when incentives stop. Total addressable DOT yield is near 12 million, and Hydration is the only parachain with real liquidity. There's no valuable yield here, and I would rather say that than dress it up. Fundamentals point one way. The chart, strangely, doesn't agree. Weekly time frame, because on an asset this beaten down, daily noise is meaningless. Price is around 80 cents, below every exponential moving average that matters. Below the 10-week at 88 cents, the 21 at $1.09, the 55 at $1.98, the 100 at $3.15, and the 200-week simple moving average at $4.70, the macro anchor. Price trades near 1/6 of its own long-term average. Price sits inside a descending channel, the white dotted lines on screen, testing the upper boundary right now. That boundary lands on the 3618 Fibonacci extension at 85 cents, anchored from the June 2025 low near $3 to the September high at 485. But testing resistance is not breaking it. Below us, the 4236 Fib extension at 63 cents is the next magnet, and it is not arbitrary. That's where liquidations cascaded on October 10th last year, and unfilled liquidity like that gets revisited. The Heikin Ashi Relative Strength Index, the oscillator below price, reads minus 33. Deeply oversold. I've drawn a descending trend line on the indicator itself, and that line is the trigger. Breaking it marks a genuine momentum shift. Here's what most people miss. The liquidation map shows roughly $20 million of leveraged shorts stacked above price, against about $1 million on the long side below. Everyone read the same fundamentals I just gave you and got short into it. 20 to 1. That's the mechanical reason I won't short here. Clear the channel in 85 cents on a weekly close, and the 2618 Fib extension at $1.38 becomes the next ceiling, reinforced by a descending trend line from the December 2024 top near 1150. Above that, the 1618 Fib at $2.20, then a second trend line from the November 2021 all-time high near $52, capping any supercycle attempt around $3. My position? Honestly. I bought DOT in 2021, took profits, kept a bag. I added around $4, documented here, and small adds near 2. My hard rule is that Polkadot never exceeds 3% of my crypto portfolio, and that's the only reason I can sit here calmly. I'm not liquidating. The position is small enough that the downside is survivable and the optionality worth keeping. My de-risking ladder starts at $140, then $220, $3, and at $360 I'm likely 70% out and reassessing. For shorter-term traders, the zone towards 60 cents is where I'd consider strategic accumulation for a bounce to 140, with an invalidation zone on a weekly close below 55 cents. Target 1 hits, stop moves to entry. Target 2 hits, stop trails to target 1. Bitcoin decides the ceiling on all of this, and it's still holding its 200-week simple moving average. If we start closing 2 or more weekly candles below it, we're looking at a longer bear phase stretching into the fourth quarter of 2026, and DOT would find any bullish reaction very hard to generate. Not impossible, just hard. Best case, revenue inflects off zero as those 200 DevNet apps go live with real fees, while active users hold above the July recovery. That turns the developer lead from a cost center into a monetization engine, into the thinnest short book on the board. Worst case, transactions keep climbing, revenue stays near zero, and Polkadot proves with its own data that its throughput is free. Then developer count is a trailing artifact, and 63 cents becomes the floor test. What changes my thesis is one ratio: revenue per transaction. Everything else is commentary. Polkadot has the third strongest developer base in crypto and almost no ability to convert it into fee income. The chart is bearish, 85 cents resistance, 63 cents the magnet below. And a crowded short book is the only thing between this and a faster decline. The lesson I keep returning to: position sizing is what lets you stay objective. If DOT were 20% of my portfolio, I couldn't make this video honestly. If this helped, hit like and subscribe. If you want the execution layer behind this, my private Discord, the Pro Capital Vault, is where I post real-time portfolio tracking, my exact accumulation and de-risking zones, weekly live calls, and prep reports. Access is through the join button below, the pinned comment, or the QR code on screen. Once in, sync your YouTube account to Discord and the private channels unlock. It's an invitation to work alongside me, not watch from a distance. One question for the comments: at what price does Polkadot stop being an investment and start being a lottery ticket for you? If you missed my June 14th Polkadot breakdown, watch that next. The levels I called there explain how we got here. None of this is financial advice. It's my analysis and my own positioning, and I've been wrong on this asset before. Do your own work.